Coming up on Arirang News, experts point to weakness in South Korea's economy because of a sharp drop in employment. This despite signs of rising retail demand and exports. Huge demand for shares of vaccine maker SK Bioscience as investors sign up ahead of its IPO later this month. Demand outstripping supply more than 1,000 to 1. And data shows South Koreans spent less money last year on supplementing their children's education through tutoring and cram schools. The biggest impact in areas like music and the arts, where there's a lot of close contact. It's 5 p.m. here in Seoul. Thanks for tuning in to Arirang News. I'm Devin Whiting. The Korea Development Institute says the South Korean economy is still sluggish, despite a rise in sales and exports of cars and appliances and improvements in consumer sentiment. The weakness comes from a drop in employment, close to 1 million jobs lost in January compared to a year earlier. Kim Jae-hee has the details.
The Korea Development Institute has assessed that the domestic economy remains subdued, mainly due to shrinking employment amid the COVID-19 pandemic, despite a rise in demand for durable goods. In its monthly economic trends report for March released on Tuesday, the institute pointed out that exports and the consumption of durable goods have soared in recent months. Sales of durable goods, led by passenger cars and home appliances, rose 8.3% on year in December last year and 26.4% in January this year, partly mitigating the general trend of lower consumption amid social distancing measures. Exports soared 11.4% on year in January, followed by a 9.5% growth in February, mainly on the back of semiconductor shipments. Consumer sentiment also shows signs of recovery, with the composite consumer sentiment index standing at 97.4 in February, up by 2 points compared to the previous month. The KDI also noted it expects the subdued consumption to gradually ease as spread of COVID-19 slows. However, it stressed that the labor market continues to weaken. The number of jobs in South Korea was down 628,000 on year in December last year, and 982,000 jobs were lost in January, marking the steepest on-year loss since December 1998. The KDI notes the job market is particularly bad for the service industry.
The employment situation in South Korea is worsening amid the prolonged COVID-19 pandemic. By industry, the manufacturing sector is seeing a slight slowdown of job losses, but the service industry continues to suffer from much greater losses.
Production from the service industry also remains stagnant, especially in the accommodation and food services sectors. Kim Jae-hee, Arirang News.
Several of the world's biggest investment banks have raised their forecast for South Korea's economic growth this year. According to the Korea Center for International Finance, 9 investment banks, including JP Morgan and Goldman Sachs, are calling for growth of 3.6% as of the end of last month. The figure has risen by 1/10 of a percentage point every month since December. But out of 10 Asian countries, South Korea's outlook is the lowest, followed only by Thailand. Next year, these banks expect the local economy to grow 3%, and that outlook did not change last month. Ahead of its IPO next week, competition for shares in SK Bioscience is expected to be fierce among investors at home and abroad. The subscription period for retail investors is today and tomorrow. As of 2 p.m. today, it's attracted bids worth almost $10 billion. Some say it could break the IPO record set last year by Kakao Games, which brought in more than $14 billion. Ji-young has more.
Amid the COVID-19 inoculation drive that's picking up steam globally, competition for South Korean vaccine producer SK Bioscience's IPO is intense. Retail investors are scrambling for subscriptions, which opened for 2 days on Tuesday.
AstraZeneca's vaccine will be shipped from SK Bioscience factory in Andong for the first time in South Korea.
SK Bioscience's IPO next week has garnered attention among investors both at home and abroad, as it has agreements to produce COVID-19 vaccines developed by AstraZeneca and Novavax in South Korea. Also, its own vaccine has been given regulatory approval to launch human clinical trials. The IPO share price has been set at around $57, which is the high end of its indicative price range of $43 and $57. SK Bioscience's market capitalization post-IPO is forecast to be around $4.4 billion. Last week's subscription by institutional investors was fierce as 1,464 firms participated in a bid to obtain new shares and submitted orders by a multiple of 1,275 for the stock made available. This is more competitive than local drug manufacturer SK Biopharmaceuticals, which scored 835 to 1 last year. An expert says the stock price is likely to show an upward trend after SK Bioscience lists on the benchmark KOSPI.
SK Bioscience's performance is much better than SK Biopharmaceuticals, as the vaccines produced by the company on a consignment basis are already being administered. Thus, the momentum in the market is very positive and is likely to show an upward trend.
With the IPO causing an intense buzz, the number of new stock accounts at the underwriter of the IPO deal has been spiking compared to previous months. Some analysts forecast the price of the stock will double after its stock market debut. 엄지영, Arirang News.
President Moon Jae-in says the government's plans to boost the supply of homes need to be implemented smoothly, despite the recent scandal over land speculation by public officials. According to the Blue House on Tuesday, Moon has called for a two-track approach of investigating the allegations while speedily pushing to boost housing supplies. He said public trust must not be shaken and that there should be no disruptions in the implementation of the government's measures announced last month to provide over 830,000 homes in Seoul and the surrounding area. The investigation, now underway, is looking into allegations that officials at the State Housing Corporation bought undeveloped land in 2 cities near Seoul using non-public information before the sites were slated for new development. South Korean parents are known for spending a lot of money to supplement their children's education outside of school. Data show that the pandemic caused a drop in spending last year overall. The drop was especially big for younger students, whose extracurricular activities involve a lot of close contact. Baeun-ji has more.
South Korean parents spent a monthly average of $253 per student on private education in 2020, down 10.1% compared to the previous year. According to Statistics Korea on Tuesday, 66.5% of elementary, middle, and high school students nationwide received some form of private education last year, down 7.9% point on year. But there was a huge gap in spending between the richest and poorest households. Households with a monthly income of less than 2 million won, or about $1,700, spent $87 per month on private education last year. Households earning more than 8 million Korean won, or about $7,000, spent 5 times more, spending $442 a month. Although the total spending on private education in the country declined, parents of high school students spent more than they did a year ago. Parents of high school students spent $340 a month on these private classes, up 5.9% from the year before. Whereas for elementary school students, the figure fell by more than 23%, and middle school students, it fell by more than 3%. The director of Statistics Korea said that this is mainly due to less spending on art, music, and physical education amid the pandemic.
Elementary students' private education in art, music, and physical education dropped, and we think this is probably because these types of activities require students to gather closely together.
By subject, math and English saw the largest amount of spending, with nearly $80 a month spent on each subject. But compared to the year before, spending fell by 4.8% and 0.5% respectively. The Education Ministry said it will seek measures to have more students take in-person classes again, so that students can rely less on private education. Baeun-ji, Arirang News.
Now, our Seoul In-kyung has a few more stories on the global economy. U.S. Treasury Secretary Janet Yellen says she thinks the latest coronavirus relief package will get America back to full employment. And exports from China to the rest of the world were up 60% in the first 2 months of this year, which represents growth even taking into account the plunge in shipments a year earlier.
U.S. Treasury Secretary Janet Yellen says She expects the country's labor market to return to full employment next year with the help of the relief package. Yellen noted yesterday local time the importance of helping the unemployed get back to work. U.S. payroll numbers have remained more than 9 million lower when compared with the employment peak before the coronavirus pandemic.
And the most important thing is to get our economy back on track and help people get their lives back in order to make sure that this pandemic doesn't permanently scar our workforce. And I think this is what we need. I'm hopeful that next year, with a package of this size, we can be back at full employment.
The U.S. Treasury Secretary also stressed the economic hardship of women and minorities due to COVID-19, calling the impact, as she put it, absolute tragic. According to the General Administration of Customs, China's exports surged more than 60% in dollar terms in the first 2 months of this year. The country's exports dropped 17.4% during the same period last year. The country's February exports jumped more than double on year, posting a record surge since the pandemic began. Continued global demand for medical equipment and work-from-home devices have been said to have largely contributed to the rise. The customs agency noted that the trade data indicates growing global demand for major trading partners like the U.S. and Europe. Brent traded as high as $71.38 per barrel in early Asian trade, the highest level since January last year. The rise came after attacks on Saudi Arabian oil facilities by Yemen's Houthi forces on Sunday. Saudi Arabia's Ministry of Energy stated that a petroleum tank farm at one of the world's largest oil shipping ports was attacked by a drone, and Saudi Aramco facilities were targeted by a ballistic missile. But the ministry noted that neither attack caused any injury or loss of life or property. 서은경, Arirang News.
Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good to have you back on.
Good afternoon.
Well, we're coming up onto the Fed's next Open Markets Committee meeting, so we're in the blackout period now where Fed officials don't speak publicly. A lot of concern out there still about rising rates. Some say the Fed is going to bring back Operation Twist, where the Fed sells shorter-term bonds and buys longer ones. What do you make of the situation, Mr. Yu?
Yes, if you look at the yield on benchmark U.S. 10-year Treasury note, it has been continued to rise to as high as 1.61% on Monday. Before now giving up some of those gains, now it's currently trading at 1.544%. Obviously, this is happening because the Senate approved the President Biden's $1.9 trillion COVID relief bills, and that the House is expected to pass it on Tuesday. Obviously, the overall economy is likely to be improving in the future, clearly affecting the long-term end of interest rate. If you look at the inflation expectation numbers, the 10-year break-even inflation rate has risen to the highest since summer of 2014 to 2.24% on Monday, and 5-year break-even inflation rate topped 2.55%. Also, 5-year forward inflation expectation rate is at around 2% level. So continue to cause some of the concern about the long end of interest rate rising further. However, though, we expect this interest rate not going to be rising at the same speed as we've seen in the past. In the last 7 months, interest rate has risen more than 1%, 1 percentage point. In the future, most likely from now to about 2% will be the peak of the rate. It's not going to be reached at 2% level until probably sometime towards the end of the first half next year, or even maybe year after. So the reason for that is because you are not seeing the overall the salary growth rate that we were seeing in the past. Right now, it is only rising. The cost of employment is rising by only about 2.3%. So all in all, I think the speed of the rise in interest rate will probably go relatively less in the future.
Well, stocks on Wall Street were mixed overnight as people watched those issues. Tech taking another hit, so the Nasdaq and S&P were down, but a moderate gain on the Dow. What's the story in the global markets?
Yes, clearly the higher interest rate environment is affecting the growth stocks much more aggressively than the value stocks or the economic cyclical sensitive stocks. If you look at yesterday's move, Dow was up close to 1%, but Nasdaq was down by 2.4%. And the small cap, the Russell 2000, was up about 0.5%. So clearly, people were betting on cyclical stocks rather than the growth stock that has been performing much better than the cyclical stock in the past. If you look at the overall benchmark yield, as I said, it has hit as high as 1.6%. The key concern is how fast this rate will rise. Higher the rate it is, obviously it is more negative for the growth stock because relatively the growth stocks have higher debt ratios and that it is much more sensitive to the interest rate environment than the value stocks or the cyclical stocks per se. So we will continue to watch over how fast the rate will change. However, though, as long as the interest rate remains below 2% territories, we think that the best sectors that has been performing well in the past several years would continue to be the best performer in the future. If you remember the dot-com bubble era, obviously the IT sector was the most best performing sector, and that lasted for almost 10 years. Right now, we've seen the growth stocks outperforming the market quite significantly for the past about 7-8 years. We think that room probably is more in the future, given the fact that the valuations and the earnings growth rate are significantly stronger for the growth stock than the so-called value stock or cyclical stock.
And in the Korean market, foreign investors continue to sell. The tech-heavy KOSDAQ now below 900 points for the first time since December, and the Kospi with a decline too, closing below 3,000 for a second day. Tell us about the local markets.
I think that's because of the currency movement. If you look at the Korean won, it has moved from 1,100 territories to now 1,140 level, so by 3% plus depreciation. So clearly, foreign investors are more keen to be selling the Korean equity rather than buying. However, though, we have to watch for the fundamental changes, how aggressive the earnings growth will come in, and also what kind of sector will benefit from the global economic recovery. We think that we are in a situation now that the U.S. dollar is not going to appreciate as quickly as it has done in the last several weeks. Also, the Korean won also should be able to stabilize at around 1,140 territories. Obviously, the interest rate environment is putting some negative dent to Korean equity market. But if you look at the overall South Korea's current account surpluses, and if you look at the overall export numbers and the economic growth rate, we think that Korea is relatively better than the most of the other economy in the world. So we don't think that Kospi is going to continue to do the correction. We did see Kospi dipping below 3,000 level, but it should be able to recover quite quickly after the futures and option closing date, which is the 11th of March.
And oil prices had recently recovered to where they were before the pandemic. Brent crude touching $70 for the first time in well over a year because of that drone attack on Saudi oil facilities. But that rally seems to have fizzled. What do you see happening with oil?
Yes, as you said, the crude oil prices have eased from the Monday's 14-month highs. It did go up to as high as $67 per barrel of WTI. Now it's come down to about $64.6 per barrel. The recent high was achieved because people were quite concerned about this attack on the oil facilities in eastern Saudi Arabia, including the Saudi Aramco facilities at Ras Tanura. But this kind of attack is probably short-term lived. And also the supply chain right now, people are concerned about it, but in reality, if the shale gas opens their pump again, the supply will pick up, and also Saudi Arabia is in a good room to increase the production if necessary. So we don't think that the oil price is going to continue to rise as some people might have predicted. Rather, we think that the oil price can remain at a box range, somewhere between $55 to $65 per barrel range. Reason for that is because, as I said, the supply can pick up any time if Middle East and the shale gas decides to put up more gas. And also, in terms of demand for gas, the oil is going to be quite timid going into the future because of the continued erosion of gasoline-based cars to electric-based cars. So EV markets are rising very rapidly, and most of the auto industry is moving into that direction. So therefore, we think that quite significant demand part of it is going to gradually dwindle. So therefore, we think that oil prices should remain in a box range.
All right, Mr. Yu, we'll have to leave it there for today. Thanks so much, as always, for sharing your insights with us.
Thank you very much.
And the latest. And the latest on the coronavirus situation in South Korea. The country reported more than 400 cases today after a dip on Monday. There were 446 new infections, raising the total cases to date to 93,263. There were 3 more deaths, raising the total to 1,645. New clusters have emerged at one of South Korea's biggest fish markets in Busan, as well as at a livestock market in Gyeonggi-do province. By next week, the authorities are expected to finalize a new 4-tier social distancing scheme, an update to the current 5 levels, in a way that's simpler and more flexible. And South Korea has now given a first dose of COVID-19 vaccines to almost 400,000 people. The initial stage of the campaign is ahead of schedule. 2 more people have died after getting their first doses, bringing total post-vaccine deaths to 13. But in 8 of those cases, the authorities have tentatively concluded that there was no link, and the others are still under investigation. Han Sung-woo has more.
A milestone reached. Over 50% of priority recipients in South Korea for February and March have received their first doses of the COVID-19 vaccine. The Korea Disease Control and Prevention Agency reported Tuesday that 64,111 people have been newly vaccinated. This raises the total to 383,346, or 0.73% of the entire population. Close to 380,000 people have received the AstraZeneca vaccine, just over 6,200 Pfizer's. The Prime Minister said the government will continue to thoroughly monitor any adverse reactions and transparently disclose the results of their research on any further deaths after vaccination. However, so far, the authorities have not found any link between the shots and the deaths.
We've judged for now that no causality can be drawn between the deaths and the vaccinations. They were likely because of underlying conditions.
Meanwhile, with cluster infections springing up nationwide, the country reported 446 new COVID-19 cases on Tuesday. All but 19 were locally transmitted, with Seoul and the surrounding area accounting for close to 300 of them. With the current social distancing guidelines expiring on Sunday, officials will announce adjustments on Friday.
Keeping a close eye on this week's spread, the government will gather the opinions of experts and come up with a revised scheme that can prevent a potential fourth wave.
South Korea's total COVID-19 caseload now stands at over 93,000. The virus killed 3 more people, raising the death toll to 1,645. 한성우, Arirang News.
And that brings us to the end of this newscast. Thank you for watching. More live news coming your way at 7 p.m. Korea time.